Welcome to The Curious Investor, Saxo's video series on topics that drive the investment markets. I'm Hou Tian and this is Charu, and today we're doing something a little bit different. Specifically, we're talking about personal finance for women. Now, statistically speaking, less than 50% of women have invested stocks in their portfolio, whereas for men, this number goes up to about 66%.
Oh.
So, professionally speaking, women have always traditionally been lagging behind men when it comes to salary. And the fact that women are not investing as much as men, it's not helping them to help them to get to their financial goals.
Yeah.
So, Charu, why are women not investing as much as men?
The gender investment gap is real. Why are women not investing that much is, I would say, a sheer lack of confidence. It's probably, how women have relationships with money, not as healthy as probably what men have. There's a lack of confidence to talk about money matters with the partners, with their friend circles, I would say. But if you look at the statistics as well, if and when women do actually invest, they're better investors than men. So in terms of the returns that they generate, on average, that's higher than what men generate. So certainly, I think it's a great topic. Women need to take charge of their finances. As you said, obviously they're lagging behind in salaries. They have a longer lifespan, so they need more of that financial independence. They need to take time out of their careers as well, for taking care of kids, for taking care of parents or whatever. So usually all of those reasons do point to the fact that there is a bigger need for women to take charge of their finances. And I thank you for bringing up this topic. I think it's a great one and hope we can really help to move the needle here.
Given the lack of confidence in investing, how can women start on this journey?
Yeah, I think that's really, as a first step for anybody, is to really understand your goals, your time horizon, and your risk profile. So I know this is something everybody would have probably read somewhere or the other. But just to make it simple, I would say, when you talk about goals, I would classify them into three very broad categories. I would say you either want to invest to save money, or you want to invest for wealth generation, or you want to kind of create a passive income stream. So I think that's really important to understand. And if it's more than one of these three buckets, then what is the kind of proportion that you want to put into those different buckets that really align with your goals? Then, of course, your time horizon, as I said, and the risk profile. I think that's another very important thing, but a very difficult thing to quantitatively understand, right? So I would say on that part, I think it's important for somebody who's just starting to kind of set aside a small amount of a capital to kind of let it run, and even if you lose that, you want to kind of use that to understand your risk profile. So I think just let that experiment run. Even if you lose that money in the short term, I think it will be giving you some great learnings to be a successful investor in the long run.
Now, for savings, I guess it's quite popular amongst beginners to want to look into regular savings plans. That's also available on the Saxo Trader platform. Whereas for wealth-wise, I think it's very common for people to look into purchasing equities in their portfolio.
Yeah.
But what about passive income, like you mentioned earlier?
Yeah, there's a lot of strategies to do that as well. So if you are an equity-only investor, you could obviously look at some dividend-paying stocks. They can give you a regular stream of income. So something like REITs, for example. There's a lot of dividend-paying stocks out there, right? So I think that's interesting. But if you are a more advanced investor, or you want to get more advanced in your investment journeys, some of the other ways would be to do some, obviously, FX trading, do some tactical trading of stocks as well. You could obviously do some carry trades as well. I think that's been very popular with this disparity in interest rates that we are seeing right now. Some of the economies, like for example, Japan still has negative interest rates. Some of the other economies also have very low interest rates, but US, the Fed rate is around 5.5%. So there's a huge disparity. So you borrow in an economy at a low interest rate, and you invest that money in the high interest rate, so something like that. So if you just take that, dollar yen pair, you get a good significant carry there. So that's a carry income, is like a daily income that's credited to your trading account if you have that exposure. And I think also options, or selling some options and getting that premium income is also one of the ways to kind of increase the yield of your portfolio. So bought into bonds over the last year or so, because they are paying a very good coupon income. So that's one way. But just while we are talking about this passive income, I think it's also important to consider your passive costs. A lot of beginner investors kind of pay a lot of money as an investment cost, as a trading cost, to their brokers or to their private bankers. I think that's something that's very easy to save on nowadays with the widespread availability of online platforms, and they offer cheap access to the market. So I think a 4% fee may not sound like a lot, but again, over the long term horizon of your investment journey, it will eat up a lot of the returns that you make. So I think it's really important to kind of continue to watch your investment costs as well.
There's a stereotype that women are more risk averse than men, especially when it comes to investing, which is a double-edged sword if you think about it, because that has helped women to be better investors than men. But at the same time, that also caused inaction amongst the community as well. How can we help them?
See, honestly, I think the best way to overcome risk is to be aware of risk. I don't see why playing defensive is wrong. I think it totally makes a lot of sense to play defensive. I think that is really the strategy to win in the long term. But being aware of the risk is important. And then how do you do that is by educating yourself. So there's no magic wand that will help you here. You have to really read and learn about the markets, about the asset classes you're exposed to really understand what's happening in that space. So I think educating yourself is very, very important. Get a good subscription to a reliable newspaper or something. Maybe your broker sends you some very interesting research. Make sure you read that. Make sure you tune into the right podcasts. There's obviously a lot of information out there. I'm sure it's a little bit difficult to filter what's good, what's not. But, well, that's the challenge. You need to find what clicks with you and your trading style. So I think that's important. Other than that, of course, I think obviously if you start early, compounding is a beautiful thing. You don't have to take too many risks if you start early. Just invest in a periodic manner, in a diversified way, in an index or any broad story, and then that can obviously just give you some very good returns in the long run. But still, if you are more of an active investor and you want to kind of take more risk, then certainly having some risk management policies in place is very important. It could be obviously diversification as well, but it could be something beyond that, something like using stops on your positions, and just kind of being conscious of the fact, being able to look back into your portfolio on a regular basis and understand where it is going and why it is behaving like that, and being able to react, being able to cut your losses at some point as well, not waiting for things to turn around unless you have a very strong conviction about it. I think these are things that can really help manage the risk.
The most common complaint that we hear is, I don't have time. So how can our female audience start to get disciplined to take control of their wealth?
Yeah, I mean, that's an issue I face as well. So no surprises there. But I think, again, like I said, you don't have to make investing very complicated. It can be as simple as you want it to be. So maybe like block out one day every month to spend an hour looking at your finances, looking at your portfolio, where it is going. If you are not a very active investor, I think that's suitable enough as well. And I think, but overall, the mindset change that women really need is, like I said at the beginning when we started talking about this, is that we need to be more open about talking about money. So, whether it's with our partners, whether it's with our girlfriends, or whatever your comfort zone is, but, go on money dates, talk about your finances, get ideas, share the ideas you have, and really just kind of, I think that really helps to kind of take control of your own finances and keep you committed to doing so on a regular basis. If you really don't have the time, perhaps there are these systematic investment plans kind of things where a particular amount of money is deducted from your account every month into the same exposure that you want it to go to. That's obviously a very passive strategy and the easiest one to follow. Somebody's really time constrained.
Thank you so much, Charu, for sharing with us on all these information. I guess if I have to summarize it to three main ideas, the first would be that, to educate yourself, there are many articles and books out there that's available. One one that comes to my mind is actually The Intelligent Investor. The second thing is, of course, to diversify across multiple assets, across different regions, which is something Saxo does offer to our clients as well. And last but not least, of course, is a risk management, right? To effectively manage your risk on your portfolio. And yeah, so I hope that this video has been really helpful to our female audience, and I do hope that this will help you to kickstart your financial journey.